Hello everyone and welcome to today's cryptocurrency update for September 7, 2022. It's been a horrible morning for me. I hope yours was better. But let's go straight to the charts and see what we got. And then we move on from there. Let's see here. We have the household items. Please use them, etc., etc., etc. Big picture, warning signs, so to say. Summary, we'll get to that in a moment. For now, I simply want to have a look here at the trend is your friend chart for Bitcoin. Is the trend friendly, yes or no? So far, it is not. When Bitcoin broke down on, I believe, August 18, it cut below all its moving averages and the Ichimoku cloud. So the trend since then has been down. And down it is. This is a 100% bearish chart. Please keep that in mind. This is not a bullish setup at all. We have no bullish signs whatsoever. Bitcoin failed to even go above the Ichimoku cloud in August. It is still weak. It needs to eventually get back above the 200-day moving average, which currently is at 30,500. So we're still miles away from it. Why is it important to get back above the 200-day moving average? I have stated that ad nauseum many times, but you can see here the red line. If we get back above the 200-day moving average, 9.9 out of 10 times we get a strong rally. We really do. If we go below the 200-day moving average, most rallies will get sold off. If we get above the cloud, but still below the 200-day moving average, it is a dubious rally, but still a decent rally, but not a bull rally, more of a dead cat bounce. Please keep that in mind. This is the market environment we're in. So looking down is preferred and not looking up. All week last week, I said the lows of this week need to hold, which was around 19,525, as you can see here. A breakdown below it would target 18,500. Today, we got as low as 18,560, 559.15. So we're right at that critical 18,500 level, which is the late June and early July lows. We need to hold today's low. If we don't, we're going to go lower. And then indeed, this rally here was not a leading diagonal, but a B wave looking like a leading diagonal. Leading diagonals are never pretty in the first place because they're overlapping, because wave 4 and wave 1 and etc. overlap in this diagonal path. So you have the option to either label it as a diagonal leading a 1 or an A, meaning that after 1 comes 2 and then 3 to the upside, or you get a B, and a C, with C to the upside. Alternatively, this was still just a bounce within a larger decline. To be determined, we know the price levels. The bulls need to reclaim 19,525. We do have now double positive divergence on the daily RSI 5. It's a condition, not a signal. We need to get above certain price levels. If we can reclaim 19,525, we can target 20,500. Above 20,500 targets about 22,000. And each consecutive step higher increases the odds that the correction since the August low is over. I can't say it loud and clear enough. If we don't, and we keep meandering lower because the market or Bitcoin is currently in a weak trend to the downside, and we keep meandering lower, then we know this was just a B wave bounce. This black wave 4 label needs then to be slid or whatever you want to call it, moved to the right. Yes, that is Elliott Wave. We anticipate, we monitor, adjust. There are technically enough waves in place to consider this wave 4 complete. However, the market reserves the right to make that not only wave 4, but say wave A, wave B, and wave C. Corrections can always become more complex. That's not my fault. It's not the Elliott Wave's fault. That is simply the nature of the market. Okay, that's why we have the trend is your friend chart. You know which way the trend is. That's what matters. Nothing else. And then the Elliott Wave is the interpretation of this. So we have very simple if-then scenarios in place and price levels to watch. Above 19,525, targets 20,500. can't make it easier enough. I really can't. Above 20,500 can target 22,000. Above that, and we can revisit 25,000 plus. Below today's low, and I'm pretty sure we're going to revisit 70,600 and potentially even lower, because there is still potential in the weekly charts to reach 12,000. I will review those once again on Friday. All right. Ethereum. Ethereum has, for now, 3 options on the table. Yes, I know, oh, what am I going to do with 3 options? Those are the 3 options that I see in the charts. Since the August high, we've technically done enough to consider the downside complete as an A, a B, and a C, right inside the ideal wave 2 target zone. So far, so good. We rallied outside of that target zone, topped yesterday, and now, when I updated the charts yesterday, have bottomed exactly in the ideal wave 2 target zone here in green, between 1480 and 1525. We bottomed at 1490. Perfect. First order, back above yesterday's high. Second order, back above the August high. Then we have a confirmed breakout. That then suggests the price action, since the August low was a leading diagonal as shown. 1, 2, 3, 4, 5. As you can see here, very overlapping. This wave count can be thrown in the dustbin when we break, or if we break, below last Monday's low at around 14,022, I believe it is. Why? Because then this potential wave 2 cannot happen anymore, because wave 2s cannot go below the start of this potential wave 1. So this is option 1. We get the breakout above 1725, I believe it is. We can visit 2000, 2150 to 2250. Okay. Now, the alternative here, this is a shorter term bullish chart, is that we have a B wave, as you can see here, wave B. We're going to rally for wave C to about 1750 plus or minus 50. And then we drop for a CSA relationship once again to 1150. Below Monday's low opens this option. Or we have a more bearish option, which is 5 waves lower, but it has the same ideal target zone of 1150 plus or minus 50. So bulls need to wait for a confirmed breakout. Okay. Can maybe go already for it, but then you know where to place your stops. 1422, I believe it is. Bears do either want to see a failing bounce, where this was a wave A. Remember, leading diagonals can be a first wave or an A wave, just as I labeled this entire rally of the June low as a 1/A. So even if this is a leading diagonal, it can be a wave A, and now a wave B, and then a wave C. Okay, so we have initially 1, 2, 3, but that can turn into an A, B, C. I tracked this similarly for the S&P 500 and other indexes. The June rally, or the rally that started in June, started to look impulsive, but we only had 3 waves higher. Then eventually we were tracking for potential 4 and 5 waves. It didn't materialize because the drop got too deep, overlapped with the potential wave 1/A, and that then turned into a wave A. I cannot know that beforehand. All I can do is track it. Bears will say it was an A wave. Bulls will say it was a first wave. Objective people say it's one of the two. The market will decide which one it is. And that's all I am providing here with you with those insights. You want to trade better? Sign up for my crypto trading alerts. We've been smashing it out the ballpark on Maytag, Cardano, you name it. All right. We can even catch nice rallies. Yes, we did get stop out on Ethereum this morning. It's fine. Tiny, tiny loss. I think it went long at 1560. Stop losses was 1523. Petite, petite. Anyway, so this is my interpretation of the chart. I wish I had more, or actually less, to offer. But these are the 3 options we are currently in. That's what you get if you are in a sideways market. Several options with loud and clear if-then scenarios. Break below 1422, last Monday's low, I believe it is, or 1420, whatever the number is. I couldn't give a rat's ass. As long as we hold above it, we can move higher. If we don't, we break lower, we can target 1150. What does that do to Bitcoin? Also there, I couldn't give a rat's ass. All I care here about is Ethereum. I haven't mentioned anything about the merge. Yesterday was supposedly some important event as well for that merge that is supposed to happen September 13 to 15, somewhere around there. It's all nice and dandy. I couldn't give a rat's ass about the merge either. I don't know how it's going to react. We have these paths available. So the market is simply setting itself up for either response to that merge, it seems to be, depending on how the merge goes. And we then have simple if-then scenarios available. But please remember, this is still the trend for Ethereum. It is slightly better than that of Bitcoin because we're not below the Ichimoku cloud and not below all the moving averages. But other than that, this is still not a strong bullish trend. When do we get a strong bullish trend? When price goes above the 200-day moving average, which is currently at 2111. Again, look what happens if we're above the 200-day moving average. This was January 2020. It went from 180 to about 300. That's a nice gain. Here we started an entirely new bull run in April of 2020. You see that? That's what we want to see. Currently, we're somewhere here on the left-hand side of your chart. Would you want to buy it there? Yes. Of course you would want to, but we could then also be here, okay? You don't know for sure where we are. What we do know is that you're in a weak trend. So maybe even Ethereum is here, right? And you continue to go lower. Forego buying here, it's better to buy here. If you buy it on a close above the 200-day moving average, you have a fantastic entry signal. Sell it on a close below it, take partial profits in between, that type of stuff, so you prevent candles like this. You will get whipsawed once or twice. It is essentially an unbeatable system. Look at what happens when you close back above the 200-day moving average. You get maybe one little losing trade here, a second losing little trade here, and then the third one went to oblivion, so to say, or infinity. That's the better word. All right. So please keep that in mind. We're currently somewhere still in this type of environment. We're not in this type of environment. Once that happens, we definitely can become much more bullish. For now, that is not what I am seeing yet. Again, Bitcoin, 100% bearish. That's a bearish trend. Ethereum also still in a bearish trend. So we need to let that play out. And that's why we're looking for these if-then scenarios. If we break higher, then we have these, okay? That was already known last week, by the way. That was already known the week before. That's what we're tracking. Ultimately, if we get the 1-2-1-2 setup, it's bullish. Even if we get the ABC C wave lower setup, it's bullish. Even if we get the 1-2-3-4-5 setup lower, it is ultimately bullish. They all resolve themselves bullish. Shorter term, we're simply trying to figure out which of these three it is. We haven't gotten the all clear sign yet. Loud and clear is the 50-day simple moving average. Look at the delineating line between a good, strong market above the 50-day and when we're below it. So we're not even above the 50-day moving average. Patience is required. Last but not least, Polygon. Polygon can be in this final C wave lower to about 68 to 60 cents, potentially even 48 cents. We need to hold support at 0.753. We broke below previous support at 0.843 yesterday, so that is now resistance. Below 753 opens the gates to 60 cents, even 48 cents. Nothing out of the ordinary. Then we simply have a ABC zigzag for ourselves to content ourselves with, and then we can start wave 3. Okay, so this one will, for the short term, be bearish, intermediate to long term be bullish. The more bullish option for Polygon is shown here. As you can see here, this gray target zone is the ideal wave 2 target zone, a 50 to 76.4% retrace of this rally, which looks like a impulse to me. 1, 2, 3, 4, 5. Okay, this could be a leading diagonal, even wave 1. Then this is wave 2. Wave 1 can even be completed here, and this was A, this is B, this is C. Fine with me. I don't give a rat's ass about the minute details. I want to see price rally back above yesterday's high, which is, I believe, about 92 cents. If we see that, it really opens the gates to reach this wave 3 on a break, of course, above 106. That's the ultimate line in the sand, the August highs for all these cryptocurrencies. I'm not reviewing the Cardanos and the Solanos because their wave count on this resolution is still quite arbitrary. If we break below last week's low, I think it is about 75 cents for Polygon, we can target 60 to 50 cents once again. No surprise, and then we simply have the wave 2 here. Okay, so we have either this setup 1, 2, 3, 4, 5 higher. If we don't see the breakouts, then we will fall and go lower. And then people say, you just say things can go up and down. Yes, for crying out loud, that's exactly what it is. We have so far bottomed in this ideal wave 2 target zone. Just like I showed you for Ethereum, please remember what the trend is. If the trend is bearish, then any long trade is a counter trend trade and should be traded accordingly. Small size, tight stops, or don't trade at all. Very simple. If you do trade it, again, then be sure that there is a larger chance that the long side trade won't be profitable. That's the difference. If you trade a bull trend bullishly, your chances of a profitable trade are much higher than if you trade a bearish trend with a long trade. That is the simple difference. So please know those differences. Do not try to nail the bottoms and the tops. It's nearly impossible to do that. Waves can extend, can prolong in time, all those things. But for now, this looks pretty good. Maytag has bottomed here so far. We can hold today's lows. We break above yesterday's highs. I'm looking for this 1, 2, 3 setup. If we do break below today's low and we do break below last Monday's low, then I'm going to look for these lower targets. Same for Ethereum and for Bitcoin. Very simple. So Bitcoin, Ethereum, and Polygon review only. Bitcoin is still in a 100% bearish trend. That's the most important part. So it held 18,500 support today. Now it must reclaim 19,525 to target 20,500 plus. Above that, and then we can target 22,000, which will further increase the odds that the correction is already over. But ultimately, like for all these other cryptocurrencies, we still need to see them break above the August high to know that the correction is indeed over. So baby steps, still very early, and it can take a long time before we finally are in a more bullish phase where price is above the 200-day moving average. Ethereum has therefore several options, but is still also in a bearish trend. Please keep it in mind, bearish trend. Break above yesterday's high, we can target 70.25, and above that, targets 20.50. That is then the bullish 1-2-1-2 setup as I showed you. If we break above yesterday's high, then we can stall 70.25, 1800 for a ABC. We have to track it diligently. We go above 1800, for example, then I'm getting quite giddy for this 1-2-1-2 setup. Otherwise, we have an ABC followed by a larger leg lower to, once again, 1150. That's the bearish case. If we break below last week's low more immediately, then we target 1150 plus minus 50 more directly. That's the bearish AB 1, 2, 3, 4, 5 for wave C setup. This will resolve bullishly longer term. This will resolve bullishly longer term. This will resolve bullishly longer term. That is all as long as we hold the June lows. Last but not least, Polygon or Maytag, two options below 0.753, and we target the 60 to 70 cents region. That's the C wave lower option. If we go above yesterday's high, it really suggests a rally to $1.25 plus cents is underway, which is of course fully confirmed on a break above the August high. But that I already stated on the Bitcoin, we need to see all these cryptos break above the August highs. So that's all I have for today. Short, sweet, simple. Again, all the externalities, I don't really give a rat's ass. I'm going to just say it the way it is. We're just tracking price. We now have very nice setups Corrections could be over, but I have, as of yet, too little information to know that is the case. There are technically enough scribbles in place to suggest that is the case, but we need to now see follow through to the upside. But please remember, the trends are still rather bearish, and those trends will change to bullish when we start getting back above the 200 days moving averages. And since those are trading lower or trending lower, that will happen sooner than later. So thank you so much for listening. Thank you so much for being a valued premium member. Trade safe, stay nice, have a great rest of your day.